Hello everyone, welcome to Travel, Food and Lifestyle. I am your host Nick the Quick. Today we are going to talk about one of the mutual funds called Motilal Oswal Nifty Microcap 250 Tri Index Fund. Before we go into details, let's understand what is microcap. So microcap are the companies which are below small caps. So we can basically split mutual funds into large, mid cap, small cap and micro cap. So microcap are the stocks which are after Nifty 500. So let's say from 501 to 750. So these are the top 250 stocks but beyond top 500. Now, why they are important? Actually, you have to go into details and understand when we talk about large, medium, cap funds, the people who are managing those stocks and the people who are working in those companies are just employees, whereas when we talk about micro cap, the promoters, the owners, the founders are directly working for those companies, and their bonding and their interest is much higher. And that is one of the reasons that micro cap success rates are even better, because they are directly working for it. And that's where the blind spot comes in. If you see, the majority of the mutual fund industry holdings as of today are invested into large cap, which is 54 or let's say up to 55%. But if you see micro cap, there is only a very small percentage of funds which are invested in these kind of companies. Definitely in micro cap the risk is very high, because these are the companies which are upcoming, these are the stocks which are very small equities. But definitely the potential is also high, because you can see the investments are very low as of today. Now let's look at the overview of Motilal Oswal Nifty Microcap 250 Index Fund. So you can see it is a new stock. It is less than a year when it was allocated. It was on 5/7/2023. The expense ratio is 0.36, and the AUM as on 31st December 2023 was 623 crore. It has increased. I'm going to talk about it in the further views, that what is as of today. But you can see the objective of this is like any other, but you always have to remember that in micro cap, one of the things is it is high risk, high gain. Now, as I mentioned, it is the inception is on 5th of July. The fund manager for this is Swapnil Mayekar, who is also responsible for many other Motilal Oswal mutual funds. The investment objective is like any other, but one of the things you have to take note is the exit load. If it's redeemed within 15 days but thereafter there is no exit load, so that is a very important thing for you to take note of it. And the application amount can be different depending on how much you want to invest. Now this is another way to look at it. As I mentioned, you can see the investment here is mainly on small, like micro cap investment. In the mid segment they have invested roughly about 20%, less than 20. And you can see the concentration, it is currently holding 251 stocks in it, and the top 10 stocks are about 12.5%, but top 5 is half of it, which is 6.77%. And in the top 3 sectors it is 36.87 diversified. So I think that is very important for to note. And see the amazing return it has been providing from the beginning, from the date of its inception. So far it has provided a return of 48.91, which is much higher than small cap, mid cap and large cap. There is a small dip in the recent times, but again I'm sure it will pick up as the economy is gonna boom in the coming months and years. But this is how the trend looks like. I'm gonna give you a comparison as compared to large and as compared to the other S&P and Nifty micro cap comparison. So this is how it looks like from the beginning. You can see the mark in yellow from the beginning. Initially it was launched at a net asset value of 10 rupees, but now it is gaining momentum as it goes with time. And you can see in comparison to S&P BSE 250 small cap and equity small cap, the performance of Motilal Microcap 250 is much better, though the dips are similar at the same time, but definitely, as compared to them, it is really good performing. You can see the comparison I have highlighted in yellow here. And again, it was a dip, but it's coming back. Now, another thing which I personally feel is very important to do a peer comparison. And if you see in the peer comparison, in 6 months of period, the returns it is giving is amazingly high as compared to any other small cap. So when it comes to micro cap, the best comparison could be done with small cap. And if you see any other small cap, even Nippon, which is one of the top small cap mutual funds, micro cap is beating that particular return by 53.89 as compared to Nippon's 33.9, or let's say 34. Currently there is no rating for it because, as I said, it is less than a year. Now let's look at the holding. So there are 251 holdings, and you can see, because there are many holdings in micro cap, and the good thing is they are trying to aim that they don't hold more than 2% in one of their holdings. So it is even less than 1.5. So the highest you can see is Himadri, which is 1.43. It continues with Jayaprakash, Reliance, Karnataka Bank, Titagarh is doing very well. It has got a lot of railway contracts. Religare is there, JK Tires is doing very well, but you can see the holdings, most of them are under 1.5, and they're diversified into different sectors. Now let's look at the composition. I have just mentioned about the top 10 constituent. It keeps on changing. You can see in this particular time it has changed. That was 2023, and now this is 2024. There is a slight change, and it keeps on changing. They don't change it very often, but there is slight change. They make sure that they are from above Nifty 500, so 501 to 750. The most importantly is the allocation in terms of the industry. So you can see they're spending a lot on industries, consumer discretionary, financial services, commodities, healthcare, utilities, and so on. Again, this holding, as I mentioned, it keeps on changing, but still not a big difference. So Himadri is one of the key holdings currently as of 2024. Reliance Power has been in one of the holdings now. Titagarh is a very important holding because Indian government is spending a lot of money in railway infrastructure. So Titagarh, even the stocks have been going up. JK Tire is also performing well, and there are certain banks like the South India Bank and the Karnataka Bank which are also part of it. So overall the holding looks very well. In terms of the industry allocation, let's look at it once again. So industrial products are majority of the equity which has been acquired. Construction companies, which are important area. Pharmaceutical, which is again an important. Auto is, if you see, Tata Motor is performing well, and auto industry may still either be not moving at a very high pace, but still an important area. Finance is going to happen. Power, a lot of potential is there. So I think overall the allocation is very well placed. They have tried to diversify into different sectors, are all important sectors. This data is as of 31st January 2024. I think in terms of the industry allocation, the equity is very well diversified and into important sectors. So let's continue. Let's look further. I just want you to have a very detailed comparison. So you can see in 1 year time period, I think microcap is very well. In case your time horizon is 1 year, you can see as compared to small cap, there is a big difference, and as compared to Nifty 50, there is even a much wider difference. So I think there is no doubt that microcap 250 for 1 year time horizon is the best investment in any mutual fund you can do as of today, though you always have to remember that these are smaller companies, so the chances of risk are very high. Again, I'm showing you the industry classification, though we have seen it before, but please take note that this is a very well diversified stocks, and again the holdings have been shown in terms of the amount which they have invested. So industrial products, which are very important, construction is going to continue, pharmaceutical an important sector, auto again, people are moving to mid segment cars now, finance, power is important, chemicals, is going to play an important role. Banks are going to consistently perform. Yes, there could be some mergers and acquisitions here and there, but still it's going to happen. Now again, equity allocation is important. As I explained before, they're trying to diversify into different sectors, so if one goes up, the other performs, the other doesn't perform, the third one performs, and so on. So capital goods is the highest as of now. Financial is also 12%. Construction, which is important, is 10%. Others are 10%. Services sector, which is going to be very important again, is holding about 9.4, similar to chemicals. Metals and mining is 7.3, and consumer staples is 7.1. So these two are also important. Automobiles, I think, as I mentioned, it's going to may not be a significant rise, so they are keeping it to the sustainable level. Now finally, the scheme details, just to summarize before we close. Exit load for 15 days is 1%. Thereafter there is no exit load. It's an open-ended scheme. You can invest anytime you want. Please keep in mind that there is a high risk, high gain, uh, basically concept in this particular micro cap mutual funds. The NAV has increased from 10. Currently it is about 15, I would say, here and there, plus minus few percentage. And please keep an eye on regular basis. I'm gonna take you to more such useful insights. So finally, I would suggest check it. Thank you.